Hey everyone, welcome back. Happy New Year to another edition of Super Prime UK with your Super Prime MJ Group Valuation Specialist, myself, Rob Cohen.
Myself, James Wild.
So excited to be back, so excited to go into a new year, a year of positivity. That's what hopefully we're going to be sharing with you week in, week out as we work our way through all of the challenges that we faced in 2022, and at some point in 2023 we come out on the other side of what has been, will be a challenging period. There is always light at the end of the tunnel, and we are here to give you that and to walk you through all of the data and intel in the property, real estate and the lending marketplace. So James, welcome back. Hope you had a good holiday, Christmas, New Year.
Yeah, no, really good. Thanks, Rob. Pretty well rested. Just catching up with family, friends, and very nice. Sort of 10 days or so off. So very good. How about yourself?
All good. Raring to go. Very much miss the weekly show. Very much miss reporting to everyone what we're seeing out there and sharing our knowledge, our view, our experience. The feedback that we get from our loyal fan base is very rewarding. We've now made it through the World Cup, Christmas, we're into a new year, and like all new chapters and new beginnings and new years, we want hopefully to give as much good news as we can to the marketplace, as well as sharing all the challenges that we're facing out there.
Thanks, Rob. So just to start off the year, in terms of the early property statistics and data, we've got around 249 new instructions over the past week or so, 80 sales and 122 properties under offer. A fairly slow start to the year in terms of that property data, probably roughly as we expected, Rob. A lot of those agency offices closing during the Christmas and festive period. So whilst we're just trying to hit the ground running in terms of the sold data, just lagging behind what was the averages over the course of the past 12 months there. But just wanted to bring you some live data as we have it for the first couple of weeks in January. Rob, I think the biggest news in the last few days has obviously been the mortgage approvals. They've fallen quite significantly. They're at their lowest level in 2 years as interest rates continue to deter buyers from sort of dipping into the market, but also those looking to remortgage, many of those people staying on their variable rates and moving on to trackers. These figures, they do run on a lag. We've got the stats here on your screen, but they show that mortgage approval slumped to just over 46,000 in November 2022. That was down from 58,000 in October last year. So again, we can see the drop off there as we moved through October to the November statistics, Rob. And it's just a case of whether November was the bottom or whether December they'll fall again, because obviously December, traditionally a slightly quieter market there, with obviously the bank holidays and the Christmas period. The lowest levels of mortgage approvals, Rob, since the start of the pandemic, June 2020. And on the graphic which we've showed you, that's obviously quite prominent, the fall there in the mortgage approvals. It's being hit by obviously the borrowing costs, as we mentioned, high inflation, and also the looming economic technical recession. It's a far cry from that sort of December 2020 period, Rob, where I think mortgage approvals, we were tipping the 100,000 mark there.
Yeah, I think it's the most important point for everyone to understand. The data, headline numbers, the intel that will come through Q1 2023 is what we would have been reporting to you in October, November, December 2022. So in reality, what we're seeing is the data reported is in some places 3 to 6 months behind where we're actually at. And I very much hope, James, that October, November, and those numbers would be a bottom level. We've studied and done all of our analytics and discussed with our clients what we've seen over the last 25 years on approval levels and where we feel October and November have reflected in that cycle. And I think there's a degree of optimism that the interest shown in the marketplace in December and already in the first weeks of January is that there is activity and a degree of confidence, even if it isn't at the dizzy heights that we've been seeing, like James mentioned, over the last few years. So I think a cautious optimism, and I think over the coming weeks and months, I hope that cautious optimism will be proved to be correct in an improvement in activity and approvals, even if it's not maybe on large increments.
That's it. And thanks, Rob. On our last show, obviously before Christmas, we brought you news of the inflation just falling there in terms of the UK inflation. It's most likely that seems to have peaked now, Rob, in line with the Bank of England's projected peak of around 11%. We're obviously down around 10.7 now. Once this gets at a more sort of bearable figure, Rob, the inflation, hopefully we see the interest rates starting to tick down, at which point we could see quite a sharp rise, and obviously the mortgage approvals from that group of people that are obviously on their variable rate. They're waiting to obviously tie in a more competitive sort of fixed rate mortgage, and as the interest rates start to fall, that will facilitate the banks to reflect that in their products. In other news, in obviously distribution and logistics, petrol for the first time around 9 months is now below £1.50 a litre. So this is welcome news, obviously, to motorists, but also those from a logistics and distribution perspective, alleviating some of the mounting pressure on those increased costs for retailers there, Rob. However, notwithstanding this, we know that Amazon says planning to close 3 of its warehouses, putting around 1,200 jobs at risk. Obviously, it is planning to open new retail warehousing in the coming 12 months or so, which will create around 2,500 new jobs. So offsetting that somewhat, I imagine it's going to be larger retail warehousing hubs, which they want to create to try and gain those economies of scale. In addition, though, Amazon obviously in the news last week as well, cutting around 18,000 jobs globally, the largest number in the firm's history, and obviously that's an attempt to reduce their costs, Rob.
I think it's the first sign of the golden space of industrial units being now put under pressure. A year ago, we would have been sitting here saying distribution, logistics, industrial would have been the key area in activity for commercial real estate. It's really the golden space. And now there's a chink in that armour because obviously with cutbacks, job losses, and now the closure of some warehouses, the golden caveat that Amazon would provide is maybe being put under a bit of stress testing there. So ultimately, I think there is going to be pressure on that industry and that asset class, and we will have to watch this space. And with the wider economy, job losses go part and parcel, hand in hand with the economic position we find ourselves in. I think that's going to be something we're going to see more of in Q1 and probably Q2 of 2023. At the same time, the good signs of cheaper petrol, inflation, hopefully peaking, and that those signals are being heard across Europe now, which again give me a degree of cautious optimism that we have peaked in a lot of the areas. And once we get through the winter, which has been seasonally one of the most mildest on record, both in the UK and in Europe, irrespective of the snowstorms that we had. Once we get through the next couple of months, energy prices can then soften and we move forward. So I think these are all good signs, but the consequences of a challenging economy are job losses and closures, which we're going to see.
Yeah, thanks, Rob. I think it's an interesting space, obviously, that retail warehousing space. Obviously, I think there's still very strong demand, Rob, for that Grade A space, and especially on a very large scale. But I think in terms of those prime yields, the peak of that market has certainly come off in the last couple of quarters. In terms of the UK house prices, there's been a drop for the fourth month in a row as per the Halifax house price index. Just in terms of some sort of headline data, Rob, for the UK, average house price is around £281,000. Monthly change quite significant at 1.5%, coming off 2.5% for the quarter change. Annualised, we're still at about 2% growth from this point 12 months ago. But I think as we move through the months of the year, that's going to drop into negative growth on an overall basis for the house prices. Just a little note, Halifax house price index now 40 years old this month. When it started, 1983. House prices gone up since then, Rob, 974%. So, I'm not sure if yourself or your parents bought a house back then, but measure it off that, 974% of their house price index.
Definitely a very, very good performing asset class. We'll reach every one of you, clients, whether meetings, calls, or one-to-ones or communication. January is going to be the month to catch up with all of you, hopefully give you as much good news as possible. I think the thing to take from the first few weeks is activity is good. There's a degree of optimism, stroke challenge, and I think having been spooked in September and October by their political uncertainty in the UK, having come through that, I think there is a degree of we've got to get on with it now, business activity, fight against all the challenges that are going against us and move on. And I think that's what we're going to see in 2023. So very excited to reach out and see you all, help all of you on the journey and vice versa. That's what we're here for. And looking forward to another year, James, doing the show.
That's it. Thanks, Rob. Just a closing note there. I think a particularly interesting point is going to be the next announcement on the inflation rates, because I think we're definitely going to have some positive news there, hopefully, Rob. That's going to probably coincide with news of a technical recession for the 2 consecutive quarters of growth. But again, I think that's operating as such a lag, Rob, that the inflation data is the more up-to-date data and gives those sort of early signs of some rosebuds coming out of the UK economy.
Yeah, I think what I'm hearing, or what people are hoping for, let's say, is more of a paper recession, and maybe the damage and the hurt won't be as bad as maybe what people were predicting back end of last year. So we can only hope for that. Let's try and keep the economy moving, keep people in jobs as much as possible, and see where we go in 2023, James.
Yeah.
Great to have you back. Thanks for everything. Great to have you back. And we'll see you all next week. Take care, everyone.
Thanks, Rob. Thanks so much, everyone.